Hi guys, good evening. Welcome to another series of Forex class. Today we're going to be looking at Forex 101. Forex 101, the basics of Forex. That's what we are going to be looking at today. So today I'm going to be talking about simple things you need to know before you start your Forex journey. So um, today we're going to be talking about higher highs and higher lows. The market moves in zigzag form. Let me bring up my um, drawing tools. Hold on. All right, so we're going to be looking at higher highs because the market moves in this type of form, right? Okay, hold on. Mm, this thing is not clicking. Let me make it work. Give me one moment. I'll make it work, then I'll come back. Okay, so just like I'm saying, in forex we have higher highs and higher lows, or lower high and lower lows. Now we have the bullish trend and we have the bearish trend. That's a bullish trend is a trend that is going up, while a bearish trend is a trend that is coming down. That's the is a price action that is coming down. So I'll use a bullish trend for example to mark out our highs and our lows, because market price moves in a zigzag form. Now just watch my cursor and watch what I'm doing. Right, I'm going to be showing you on the screen. Let's get that out of the way. So this is how the price looks like. Okay, sorry. So we have the when price is bullish, price will start from up, higher high, sorry, higher high, higher low, higher low, higher high, higher low, higher high. So basically this is how price will be moving as price is going up. Now this is known as the bullish trend. Let me represent it using the annotation. Just give me one moment. All right, so this is known as the bullish trend, right? This is the bullish trend where market is going up, creating higher highs, higher low, higher high, higher low, higher high, higher low, higher high, and so forth and so on. So that is the bullish market. And as price is creating higher highs, higher lows, we are seeing consecutive break of structures. That's price is breaking each highs as it's going up. Price will break this high. These are called break of structure. This is basically the bullish market structure. This is break of structure. This is break of structure. So, so this is just basically after price went high, it came down because price would basically there's three major moves, but I'm not going to be talking about the third one, which is a ranging market. A ranging market does not go up or down. Like a ranging market would go like this: up, up, down. It does not break any major high or any major low. This is called a ranging market. I'm not going to be talking about it because I don't want to bore you with gists upon gists. There are some things that I will not be talking about. I'll just go straight to what you just need to know in the forex market that could make you money when you begin to trade. That is only what I'm going to be talking about. So this is a ranging market. It does not go up, it does not come down. I'm not going to be talking about it, but bear in mind that this is a ranging market. Market that does not go up or does not come down. Please, you get your pen and paper and try to jot down these things I'm saying. You understand? So that you can all better stay. I'll record this video and I would upload it so that you can watch, you know. But if you get to pen and paper, it's better. Now that is a ranging market. Meanwhile, a bullish market is just a reverse of, I mean, a bearish market is just a reverse of the bullish trend, right? Now, in a bearish trend, price will be coming down in zigzag form. You understand? Higher low, higher high, higher low, higher high, higher low, higher high, higher low. So this is a bearish trend. Why this one is a bullish trend? This one is a bearish trend. Bearish trend because price continues breaking each low. You understand? It's also a break of structure, but it's breaking it downwards, right? Price is breaking it downwards, breaking it downwards. So this is basically um how am I going to call it? The basic things you just need to know to get you started. After this, I'm using this to explain. After this, we'll go back to the chart and we are going to look at a trend. We are going to identify bearish and a bullish trend. You understand? So now that we have seen this, I've drawn this for you. Let's go back to the price action to see our trend to notice how the trend is formed. It might not be as smooth as what I drew for you here. It might not be as smooth as this, um but you will notice it, you will see it. Now, from looking at what is going on here, um okay, looking at what is going on here, I'll switch to time frames. Okay, before I even go further, this is trading view. This is where we do our market analysis. This is where we get, we analyze the market before we go and trade, go and enter the market. So once you want to start, you want to come to tradingview.com/chart and it will open something like this. This pair right now that we are looking at is the USD We have different forex pairs here. If you look at the right hand side, you see all these pairs. These are the ones I'm trading. That's why I just pin them here. There are several pairs, forex pairs, both crypto pairs you can trade using this trading view platform. So now we have the time frames. These are time frames where we select to do our analysis. Um, we have from monthly time frame, we have weekly time frame, we have daily time frame. Look at the cursor, look at what I'm marking up here. Monthly time frame, you see it 1 month, 1 week, weekly time frame, daily time frame, 4 hour time frame. Now what does this tell you? If we click on the monthly time frame, this is what all that thing means. It means that every candle you see here is 1 month candle. Let me remove this. Yeah, so everything you see here, like you see this candle, this is like a bullish candle. See this black and gray candle here. The black one is the bearish candle. That's candle that is coming down. The gray one is the bullish candle. This is how I just this is how I organize my own. Normally, if you load this trading view on your phone, it's going to come out blue and red. You understand? So the blue one is the one that is going up, which is the bullish candle, while the red one is the one coming down, which is the bearish candle. So now each of these candle represent 1 month, 1 month candle. You understand? So this thing is called candles. We have candles to represent our price action. So this whole candle here, any candle you're seeing here, this one, this one, this one, these are all 1 month. So it takes 1 month for one candle here to form. That is on the monthly time frame. Now if you come to the weekly time frame, each candle that you see here, it takes 1 week for this candle to form. You understand? It takes 1 week for this bullish candle to form. It takes 1 week for this other bearish small candle to form. It takes 1 week again from this other candle to form. Just like that. If you go to the daily candle, daily time frame, that's how you can just do your analysis. It takes 1 day for this candle to form. It takes 1 day for this candle to form, and it takes 1 day for. So if you're going down like that, down to 5 minutes, you can see that each candle here is 5 minutes candle. So each candle that forms here is just for 5 minutes. This one is 5 minutes. This one is 5 minutes. This one is 5 minutes. So that is how you do. That is how you know your time frame and your candle formation. Now if we want to check the trend of the market, we can also check trend of the market using the 5 minutes. But from the trading this thing I'm going to be teaching you, the trading pattern I'm going to be teaching you, we are checking trends using the 4 hours, right? That's what we are doing. We are checking the trend of the market. And what is the trend of the market? The trend of the market is either supposed to be bullish or bearish. Now, a bullish trend goes up, a bearish trend comes down. Now, let's look at the trend of the market using 4 hours time frame. What can you see? What can you see? Now, if I decrease this a little bit, now you see that USD JPY, which is this pair we are trading here, is bullish. Because why is it bullish? Price is coming from down and it is going up, higher high, higher low. Okay, excuse. Sometimes this system used to give me issues, so it hangs. Well, I'm trying to change it. Oh my god. Okay. Oh, sorry for that. Okay, higher high, higher low, higher high here, a little bit of higher low. Then we saw another higher high here. You understand? Then we are getting higher low, and we are getting a higher high, and we'll get a higher high in no time. So because the trend is what is bullish trend, we see consecutive break of structures, just like I from the illustration. We see consecutive break of structures indicating a bullish market, telling you that USD JPY, that's USD Japanese yen, is bullish. So if I flip this over, the same thing for the bearish trend. Now I'm going to flip it over using the inverse this instead of me to go and start looking for. Okay, okay, fine. Let me see. So I'll flip it over. Now remember, inside this 4 hour trend, bullish trend, we can also see that inside of it, like as price from here, now price went up and came down like this. Inside this down that it is coming, and inside this up that is coming, there are if you look closely, you can still see internal structure. Up here, down here, up here, down here, up here. These are called internal structures. So for every bullish trend or bearish trend, we have internal structures and we have external structures. You understand? We have internal structures and we have external structures. So that is what I want to also draw your attention to. We have the internal and the external structures. Yeah, so the external one The external one is the main structure, which is coming from the 4 hours time frame, or the daily time frame, or the weekly time frame, or the monthly time frame. You understand? That is the major structure. So we pick our major structures from the higher time frame levels, and we consider higher time frame levels from 2 hours, 4 hours, daily, weekly, monthly. Those are our higher time frames. You understand? If I'm fast, please, you're going to rewind the video and listen again to what I'm saying, and make your note, jot down what I am saying. So we have our higher time frame is from 2 hours, 4 hours, daily, weekly, and monthly time frames. Just as you are seeing here on the cursor, 2 hour, 4 hours, daily, weekly, and monthly. Now our those are our major structures, trend structures. Now we have our internal structures, which we can use the lower time frame to mark out. You understand? Now this is on 4 hours. If I go to, let's say, 30 minutes, now you now see clearly how I now marked the internal structure. You see the internal structure now. From the 30 minutes, there is too many candles because the candle is now divided into 30 minutes per candle. So you see the internal structures now is this one: up, down, up, down, up, down, up, down. Why? The major structure from the 4 hours is just one big down and one big up. So that is it. We have internal and external structure. Now, this is only what I'm going to tell you for here. This is what I'm going to tell you for here. So meanwhile, now the internal structures are used for to get your entries, while the external structure is used to get your trend. That's your trend. Your trend means where market is going to. That's the major move of the market. So if you can know your trend, know the major move of the market, that means you can actually trade. Because if you can use your time frame to get the major move, which is the 4 hours daily and weekly, then you know that, okay, price is actually, barely looking at the candle formation here, we can see, okay, this is our around this place. You see that market is ranging, market is, not really going up or down, it's just, there. Then around here we saw a major break of structure on the 4 hour time frame. Now this is a break of structure. It means the trend have changed to bullish. It means that price is now climbing up. So when price climbs up like that, and we see that price is climbing up on the major structure, then we now switch to our minor structures time frame to get the entries. So we use the major structures, the 4 hours, the daily, the weekly, to know the major move where market is going to, and we use the minor structures after we have known the move. We can now use the minor structures to get the entries where we can enter from and make money. Now, the same thing, I've been talking about the bullish trend. Now, the bearish trend is just the reverse of the bullish trend. So, if I flip this now, we now see that this is now a bearish trend. You see, the same thing I was doing for bullish is now turning to bearish because it's almost the same thing. So price went up, came down, went up, came down, went up, came down. This is the major trend. So when you see something like this on any pair that you want to trade, you're looking at all these pairs now, you go to the higher time frame, just like I told you, which we use to get the major structure and the major move of the market, the major trend. We get our trend. You can mark out the trend. When you see one break of structure downwards, you know that price will be going down. You see the second break of structure, it confirms it. You see the third one, just like that, you know that price is going down. So what do? You go to your lower time frame and look for entry. Now I'm going to be teaching you that one on the advanced class. I'm not going to be teaching you this on the basic class. I'm only trying to explain trends for you on this class right now. So price goes up and down. That is forex for you. Goes up and down is a zigzag movement, depending on what the news or what price will be doing. You just know your trend and you trade in accordance to your trend, the trend of the market. Now I'm going to be talking about candles. Candles will be, I'll keep this video short. Just like candle is very easy. Candle is what we look at and we say, okay, yes, price is moving either up or down. So we have the bullish candle and we have the bearish candle. If you the bullish candle, looking at the chart right now, this is the 4 hour time frame for you, USD JPY. These are all candles, and this is what determine the movement of the market. Now we see the bearish candle, like I told you. These are the red candles or the black candles in this case. So these are bearish candles. This is bullish candle, the gray one or the blue one, as the case may be. So now, candle formation, looking at, okay, let's single out uh, candle comprises of two types. I mean, if you look at the candle, I don't know how to explain it, but okay, let me just do a diagram. Now, if you look at the candle, you see something like this, like this. You see something like, sorry, what did I do? No, 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 no. Now, a candle, whether it is bullish or bearish, you see something like this. Then you see one arrow, kind of, or a long thing that's piercing from up to down, right? Something like this. So let's say this is our candle and this is our, let's just call this one a bullish candle, right? Let's call this a bullish candle. Okay, let's call this a bullish candle. Now, looking at this candle like this, just what I drew here, you see that this, from this part, sorry, cancel. So from this part, we have this long thing you're seeing here is known as the wick. From here, let me mark it out so that you see. So this long thing you're seeing here is known as the wick. Let me write it for you. Wick, known as the wick. Why this full thing you're seeing here? What am I going to use to mark this properly? What am I going to use? I want to mark it properly for you. All right. Okay, I'm not seeing anything to mark it, but looking at from here now, from here to this lower end here, where this thing here, this is the wick. Both from here, this little one here down to this side is the wick. Now this big one, this big okay, let me color this other thing for you. Let me color it. Okay, this is a bullish candle and supposed to be blue, right? Let me color it for you. Okay, so if it is blue like this, okay, this long thing you're seeing down to that blue line there is known as the wick, while this whole thing is known as the body. So the candle comprises of wick and body. So maybe in your spare time you watch some videos to explain this is the body of the candle, why this other side is the wick, this side too is the wick. Some candles might not have long wick, while some have long wick. So, but it doesn't matter. Once you see that, you just know that that is the wick of the candle, or the other thing is the body of the candle. So this is the wick. Now I'm not going to be going to too much details of how these forms and how the other one forms and whatever. But just know that what you're seeing here, this is the wick, this is the body, this is the wick. Just like you're seeing here, I will expand the main candle for you to see. Now this is just like, this is the wick, this is the body, this is the wick, this is the body, this is the wick, this is the body, this is the wick, this is the wick. So just like that. So every candle has wick and body. Every candle has wick and body. Wick. So we have two wicks and one body. You understand? Sometimes the wick can be very small, just like this candle here. This very one. This very one. Look at how the wick is very small. Very small wick. Sometimes if you don't expand it, you will not see it properly. You feel like there is no wick in the candle, but there is always a wick, even if it's very small. So that is just the candle for you, whether it is bearish or bullish. you know we That's how we look at our candles. Now there are different things we are going to be talking about. How, as these candles are printing, there are different things we are going to be talking about. There are things like the order block, there are things like the fair value gap, and there are things like the what's it called? Okay, order block, fair value gap. We have breaker block. We have breaker block. We have a whole lot of things we are going to be talking about, but that one will now be, maybe I'll talk about that one tomorrow on the next video, right? So we are going to stop here. I'll make these videos just 30 minutes so that you can understand. So this is basically how the candle looks like. Now on our next video, we're going to be talking about you know um other blocks. We have demand block, order block. We have the supply order block. um we have the fair value gaps, and we have the key levels. So I'm going to be talking about that when we come to the next video, which I'll be doing tomorrow. I think I'll be doing videos now. I'll do videos tomorrow explaining the order blocks and the fair value gap, and those other small things you are supposed to be noticing as the candle is forming. Now, as the candle is forming, there are things you're supposed to be noticing. There are things that will be marking out as the candle is forming. This will give you insight on what to do and how to enter the market, right? So I'm going to stop here for today. Today we've learned about the bearish trend and the bullish trend. We've learned about the major trend and the minor trend, where we said that the bearish trend is when the market is going up. The bullish trend is when the market is going up and we see consecutive break of structures, while the bearish trend is when the market is coming down and we also see consecutive break of structures. Now inside the major trend, which is the bullish trend, we said okay, we can get our bullish trend from 4 hours, 2 hours, daily, weekly and monthly, while the minor trend we can get it from 5 minutes, 15 minutes, 30 minutes and 1 hour, right? So inside the trend we have two trends. We have the major and the minor. The minor now is from the smaller time frame. That's where we get the minor trend. So the minor trend is inside the major trend. So inside this major trend we will still be seeing something like lower low, lower low, lower high, lower low, lower high, lower low, lower high, something like this. So that's what we're going to be seeing on inside the major trend. We are going to be seeing something like this. The minor trend will be inside the major trend, so don't get yourself confused. So you see the minor trend clearly when you go to the smaller time frame, right? So this is how it is. We have the major and the minor trend, And we also talked about candles, where I showed you the wick and the body of the candle. So we have the bullish candle, we have the bearish candle, we have the bearish trend, we have the bullish trend, we have the major trend, and we have the minor trend. This is what I talked about. And for every trend of the market, trend is just how the market is going. That is the meaning of trend, where the market is going to. So when we say bullish, it means okay, the market is going up. That is the trend. Now, for you to know that this thing is actually going up, it must be breaking each high. For you to say this is a bullish trend, it must be breaking each high that it created. So when market goes up and comes down, it will break this high, making it a bullish trend. It must break the high, it must break the high, it must break the high, make it a bullish trend. Now the bearish trend also will break the low, the low, the low, the low. So that's how you know your bearish trend. So these are the things we've talked about today. So tomorrow we are going to be looking at the other ones. I'll also split them for you so that you understand how the market works. So from tomorrow, the next one, you see that you'll be grasping the whole thing in forex, and you can take your trades and with confidence. Thank you for watching this video. See you in the next one. Bye.